shorting.
Mhm.
So my problem with shorting is that I love shorting because not only do you get the joy of making the money if you're right, you get to be right when a bunch of people were betting the other way, and so you get this. I'm double right. It felt really good, and so I had made so much money being a contrarian, just as such a dopamine hit. And I had made a bunch of money betting against the trends or betting on the turn of the trends
Mhm.
so often that it had been baked into me for a number of years until it just doesn't work anymore. I cannot find any way of being net short that is not standing in front of a steam truck hoping I'm not going to get squished. The payouts just don't seem worth it. I'm wrong. It's wrong too often. And I just want to show you this chart just to show, my my pain. Two things. One, the Widowmaker trade, which is Tesla. I don't know why I was shorting Tesla before I liked Elon Musk.
Yeah.
Um, and so it was just a nightmare. I mean, I don't have to even pull up the chart for that. You can just imagine how many times I got my face ripped off shorting it. I tried options. I tried shorting the asset itself. It turned out a tweet from Elon and it could wreck my entire position. So
Mhm.
I stopped trading that. But then there was this other asset called Trupanion. I don't know if you've heard of it. It is a insurance company for pets. So essentially, you pay your monthly fee, and then when you need to bring your pet to the vet or get medical expenses or whatever, it's covered by the company. So I found out about it. What was it? Yeah, I guess around 2018 here, and yeah, around this point over here, and it was priced so high versus what the PE would suggest for an insurance company, and I just kept running and running, and the case for it just didn't make any sense for how can it actually make any money long term, and how can they pay out these things, and then there was all these stories coming out about how poorly they were treating the customers and how they weren't always paying out, and it was a big pain. And so I kept shorting every time the short failed. I kept shorting again and again and again until here, and I was like, and again, just completely got ripped
Ouch.
on this thing, and then I stopped. I remember looking at it around this peak over here, going, okay, well, I guess I'm completely wrong about shorting companies based on valuation and fundamentals, and
Mhm.
then of course it falls dramatically, and
Yeah.
it's continued to fall, and so the timing of shorts, whether I'm using options or just the straight asset, I can I feel like there's no way to get it right anymore because there's so much money flowing through the system, in a way of speaking, that you're wrong, 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 wrong until you're right, which Murphy's law is exactly when you're no longer in the position.
Yeah.
So do you ever find yourself like how do you think about shorting now? Because I'm no longer short. Like I no longer am net short ever again on any asset, no matter what they
Fair.
say.
Well, I only short in futures, and I know for a fact that much of my shorting in futures is a mean reverting reversal trade. So it's still intraday. It is tougher to do. I have I have an approach that's systematic that triggers a signal, but I know that what I'm measuring is short lived, right? This is not a trend trade. I can't hold that short forever. I got to be in and out when the panic is over. And the great thing about shorts in futures or in stock index futures specifically, Nasdaq and the S&P 500 or NQ and ES, is that when you see panic, it shows up quickly. And those sell offs are usually very fast and very aggressive. And those are the moments where I make the most money. Because when the signal is strong enough, I'm taking an adequate sized position to capitalize on that move. But I know that there's buyers that are going to show up at key support levels that are going to push me out of my position. So effectively, I use a systematic trailing stop to be prepared to get out of that position at any point. And my stops initially are very tight. So my risk to reward proposition is really good. I'm somewhere around 3-1 for the most part. And when I capture it, I'm usually capturing it about 80% of the time. So the approach that I'm taking is that I'm looking for panic. I'm looking for reversals. I'm looking for that exhaustion of buyers. And I know that the trade is not going to last long. Like the average trade is going to be maybe an hour and a half, sometimes 3 hours before I'm back out again. And this is the example of the types of trades that we talk about that are very difficult to do. I know it's very difficult. It's been tough to build a strategy that actually works consistently. And I have to tweak it from time and time again. That said, I don't I don't recommend it because I agree with you. I think that markets tend to go up over time, not down. They skew to the right. And so if markets tend to give you all this upside, it's really a question of, okay, well, how can I expose myself to as much of that upside as possible and get into the right, names, the right indexes? For the most part, I'm a huge fan of, XLK and XLF. These are good ETFs that give a good exposure to technology and finance companies that have terrific upside relative to the S&P 500 and actually outperform the S&P 500. But in the meantime, while I'm holding these positions for months, sometimes years before there's a clear rotation and I need to exit these positions, I want to be capturing some of these short-term volatility moments in futures. I'm also interested in how we can do the same thing in options, of course, when there's low premium cost and there seems to be pretty low volatility, and there's some signal that we might be reaching a top. It's a pretty interesting time to open some put positions and
That's
protect
right.
yourself from that downside.
That's right. All right. So it sounds like, I mean, you're reiterating something that I've gained through osmosis talking to you, and that's there's no point in looking for a bearish trend to trade because your downside is capped to it going to zero, and the upside is theoretically infinite. And so, what are you
Yeah.
really getting out of that?
I keep thinking of like Bill Ackman for the longest time was an activist investor that was interested in shorting companies that he believed were mismanaged, right?
Right.
And he and he did this for a very long time. Like he was pretty good at it and very confident in it. So then he goes after Herbalife and pisses off Carl Icahn. And so Icahn starts moving against him by buying as many shares as possible and squeezing him out of his position. And I
Oh
think he
my
lost
god.
over $1 billion on that
That's
trade.
right.
It's a fascinating story that, when you look at it done at size, at scale, somebody who's doing this as a professional, even I think even Bill Ackman has warded off shorting now. He doesn't hold long-term shorts anymore. He's mainly a long-only investor, or he'll look at other products. I think he made a ton of money on credit default swaps in 2020,
Sure.
for example. So different products, different instruments now, but long-term shorting, yeah. I mean, the market isn't evenly distributed that way. It pushes up and to the right more often than it goes down. And when it goes down, if there's any kind of trend, it's usually very short-lived. Maybe a month, maybe 2 months. Just look at COVID. How long did it take before we hit a bottom and reversed back up again?
For
The
sure.
market wants to go up, so it's
Right.
it's pretty difficult to short.